all my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life I've been grinding all my life. Look, all my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life I've been grinding all my life.
Hey everyone, how's it going? Make sure my microphone's not muted. Done that a few times. So guys, it's been a while since I've done a live stream, but I thought now's a good time to catch up with everyone, cover some news, keep you up to date with what I've been doing with my portfolio, any big news stories out of the market that we've been seeing, and just a general recap on the market overall. So I think it would probably be best just to start with my portfolio. Recently, just in the last week, I've actually developed a bit of a Google spreadsheet that keeps track of all my whole portfolio, my holdings, the profit loss on all of my holdings, and sort of compares it to if you had invested just in the ASX 200. And it gives you some nice little points here, as well as my largest holding, all-time relative best performer, and the daily change. And you can also jump across and see all the holdings and their profit loss for each holding, the cost basis, their current value. All that information is available, and I've made that available to anyone that's in the Discord group. When you join the Discord group, it will be at the pin to the top of the welcome tab in the Discord group. So if you want access to all my holdings, each stock that I have, my current profit loss on all of it, jump over to the Discord group, which the link should be in this video, and you can see all of that there. And that for me is just being able to provide a level of transparency for anyone following me. I want you to be fully aware where my money is, and particularly when I'm talking about certain stocks, I don't want to be pushing or talking about certain stocks without you knowing that I may hold them. So I thought it was good to put that out there, and you can completely see where I stand with my profit loss. So, you can see if I'm doing poorly on certain stocks, that may be helpful to you, may be helpful to decide not to listen to me as much because I'm not getting things right. But yeah, I think it's just a nice thing to be able to offer to everyone. So if you jump over the Discord, you can find that one there. But yeah, the current portfolio is doing pretty well. It's bounced back quite substantially from the lows during COVID. At one point, I think I was about 20% down on my holdings. And as you can see now, my current holdings were just over 20% profit. And this doesn't take into account profit loss, certain positions that I may have sold for a profit and I no longer hold in a stock. So, overall in the last 3 years of my investing, my profit is more than the 20%, but this gives you a view of the current holdings. And the biggest one, the best that I've got at the moment is Afterpay, nearly 900% on that one. It's had an absolutely crazy run from its nearly $8 low, and I think today it's up like around $54, I think it is. Let's just have a look. Yeah, $54.52. So Afterpay has been an absolute cracker of a stock to have owned just in the last couple of months. And if you picked it up at around those $8, $9, $10 levels, you'd be absolutely killing it right now. But it's been in my portfolio for quite a long time now. One of the early investments. But the largest holding isn't Afterpay. My largest holding currently is actually Flexi Group, which is similar to Afterpay. They have a buy now, pay later product, and they're one of the only profitable buy now, pay later businesses. And I actually picked up more of Flexi Group when it was falling down as low as, I think it was around 70 or 80 cents. And we're back up to about $1.43 now. So it's been doing quite well. It's been pushing the portfolio up. Kathmandu, if you have been listening to me over the last few weeks, you know that I had a really big position in that stock, and that it was actually my largest holding, which it has slipped down to number 2 spot now. I actually sold down that, and I think I spoke about this in the last live stream. I sold it down just because I thought that the stock had a pretty good run. It reached my exit goal pretty much, and I thought I'd just take a bit of risk off the table. So that's pretty much an overall picture of my portfolio as it currently stands. And if you do want to have a really deep look into each of those holdings, I've got about 33 stocks that I hold currently. Jump over the Discord group and you can have a look at it all there. So moving on from that, I thought I'd just cover some of the news that came out of the Australian market today. And the Australian market has been rallying, and US market, all global markets have been rallying quite substantially. And I don't want to be pessimistic. I'm usually the one that's driving the bull case for the stock market. I think it's getting a little bit top heavy, and that we're pricing in a lot of things aren't as bad as what we had planned, but also there's still going to be a hit to earnings, and a lot of these stocks are at levels that they were currently trading at before COVID-19 hit. So the stock is sort of trading at an evaluation, saying that earnings won't really be affected, when we know that they will to some extent. So I think I've read a lot of analysts saying a similar message, that they're upping their price target on stocks, but they're still maintaining a hold rating on a lot of these ones, because looking forward, a lot of the bounce back or the optimism where we haven't done as badly as what we thought has already been priced in. So we see the ASX, it's up for its 7th straight day now, and it's absolutely killing it. CSL led the gains, rising 2.6%. Wesfarmers up 4.9%. Afterpay up 7.5%. Cracking day from Afterpay, new record high on that one. Saracen Mineral Holdings rose 8.5%. Harvey Norman climbed 7.3%. And Gold Road Resources advanced 6.1%. So we're seeing massive numbers. So we're definitely still got a lot of volatility in the stock market. And I think people aren't fully comprehending that. If you were tracking the stock market in the last couple of weeks, you would have seen a lot of the banks and the financial stocks just absolutely bonkers with their volatility. The amount of daily movement that we had out of the likes of Westpac and NAB, Commonwealth Bank, ANZ, was just crazy. I feel for any of the mum and dad investors or retirees who typically put a lot of their money into the bank stocks, thinking that these are quite stable, the pretty quiet stocks. They don't do too much movement. Normally you get your 4% dividend per year, you take it, you're happy. Stock might move 1-2% per day, not too much to worry about. And these stocks were moving 7-8% in a single day, some of the days in the last couple of weeks. So for any retirees or your mum and dad investors, that would have just been, it's all right for younger people that invest in the likes of Afterpay and your big tech names and that sort of thing. You get used to that sort of volatility, but bank stocks, 8% in a single day, a massive volatility compared to what they normally have. So it's been a crazy couple of weeks in the stock market for sure, particularly for financial stocks. They're just moving like they haven't before. So couple of re-ratings on stock, or just perspective on stocks we've seen here. Let me just scroll through to. Okay, so we got Bell Potter saying Flight Centre rally, pricing in too much optimism, and I have to fully agree with this. Flight Centre, I'm not a fan of the stock to begin with, and like that's just my opinion. It's maybe a reasonable stock. Personally, I just don't like the business model of Flight Centre, but it's still a business that pulls in revenue, pretty considerable revenue. It's been heavily impacted by the current situation, or the situation that we've seen in the last few months, but the current stock price is pretty much pre-COVID levels, and it's just a little bit crazy in my eyes. I think they've got a bit of a rocky road ahead of them, and not the good kind, not the kind of rocky road you want. So I'd be definitely being a little bit cautious with your travel stocks, but in my eyes, they're stocks that they potentially could come out of this really well, that have a reflective view of their business, restructure it, reshape their business model a bit. But I think in the short term, it's going to be high volatility. And if you're not someone that wants to expose yourself to higher volatility, and then these aren't going to be the stocks for you, because potentially there could be a much bigger, or not a bigger dip, but there could be another dip before it continues upward trajectory long term. Brokers still cautious despite Wesfarmers retail figures, and this is a common occurrence that we've seen. A lot of these analyst brokers, they're all coming out and saying they're cautious. That these stock prices are coming up, and these analysts, they want to try to be right. They want to try to be playing both sides. Never invest based on an analyst, because very solemn is an analyst correct. They try to play both sides of the story, but a lot of them are coming out that they're having to put up their price targets because the prices have rallied so much since the March lows that we experienced. But they're also trying to say, look, yeah, we're upping our price target, but we're a little bit cautious because there's still going to be some economic impact. We don't know to what extent that will play out the next 6-12 months. So we're just going to say, look, yep, we're going to up this price target, but we're just going to say, you know what, maybe a hold. We're not going to say a buy, because you're not getting it cheap. It's not a value play at the moment. And there's just a whole lot of that going on at the moment. We had Kogan come out with a capital raise today. So I actually hold shares in Kogan. I think it's about 4th or 5th biggest holding in my portfolio. And as soon as I saw this, I thought, they're taking advantage of the higher stock price because it's rallied so hard due to the whole idea that online is the holy grail now. Anything online has really rallied quite strongly because of this adoption, early adoption being pushed forward due to the COVID-19. So this Kogan share price has really rallied quite strongly, and I thought, well, they're taking advantage of this, which it's in their best interest too. But as a shareholder, you kind of feel like you've been played a bit. But they've come out and they're saying, look, this cap raise, we haven't really done cap raises since we IPO'd, and it's only $115 million, which represents less than just under 10% of the current shares on offer. So there's not a huge amount of dilution factor. And it's only $115 million, and they want to put it towards strategic acquisitions. So they're saying this is money that we're going to sit on the side and have it there for when we see a business that's, it has a good name, it may have good supply chains, anything that may be of interest to an online retailer in acquiring. but the business may be struggling because it's a brick and mortar type storefront, and Kogan has a track record of taking brick and mortar type businesses. You got the likes of Dick Smith. They shut all the stores down. They acquired that. They converted it to retail. They converted it to online only. Matt Blatt, or Matt Black, I think it is. Matt Blatt. I'm not too sure, but there was a business, the furniture retailer. They acquired them recently, quite cheaply, and going fully online and integrating with the Kogan business. So I think Kogan has been quite good at doing that over the years, and reading through a lot of their actual announcement for this cap raise, it gives a little bit of confidence in the management in Kogan with what they're doing. You know, they have a good history, good track record of solid return on capital that they get from their shareholders. So no doubt that they'll take this $115 million and look to put it quite wisely into beaten down businesses that they can integrate into Kogan. But that's a little bit of news that came out of Kogan today. And I actually had a question about Myer on the Discord chat this afternoon. Kogan is actually worth 5 times as much as Myer now, which is, you know, a couple of years ago you would have saw that and thought that's just crazy. But you know, that's why I tend to be more geared towards the online business direction, because a lot of the brick and mortar physical storefront stores are the ones that have been going bankrupt. They're the ones with greater overheads. They're the ones with greater capital expenditure. You know, they have to put so much more into running their business purely because they have a physical storefront. And that's why the online retailers, they can do away with all that. They can cut away all that expenditure and put it towards marketing, growing other business segments, acquiring other businesses. So typically that's why I'm a bigger fan of these online retailers compared to your physical storefronts. Afterpay hit an all-time high. We talked about that earlier. I think that's probably it for the ASX news. I think that pretty much covers it. I'll just talk about some other stocks that I've been looking at. So if you follow on the Facebook page, I mentioned Novonix earlier. I think it was last week, and I mentioned it, and it was about 50 cents or so. It was around here-ish, or it might have been somewhere around here. But I actually heard about this company through listening to a great YouTube channel. If you have a chance to check him out, Hyperchange. I think it's Hyperchange. Let me make sure I got that right. Might be thinking about a computer brand. No. Hyperchange. If you go check out Hyperchange, he has a great YouTube channel, and he's pretty close with Tesla. He actually is a part of a lot of like podcasts and that where Elon Musk is actually involved. And he actually heard this news about someone that is high up in Tesla basically saying that Novonix, what they're doing is really just revolutionary. And Novonix, what they do is battery technology. They different manufacturing methods for batteries. And they came out with an announcement. I'll just try to find it. Just around here somewhere. Now, I think it was this one possibly, or it might have been a different one. Sorry, I'm just trying to find which one it was. I think it might have been this one. That came out yesterday. Yeah, I'm not too sure where that other announcement is, but it was just this whole article, like a report into this battery manufacturing technique with synthetic graphite, and basically it was saying that what they had gave them better battery performance than what Tesla even can produce. So better retention, which allows the battery to last longer, and improved Coulomb efficiency, I think it is. I don't know a whole lot about battery technology, but looking at it, it really seemed like this was a business that had something of great value. It's been patented, and you know, I put on the Facebook page, I said, look, Novonix, this is a company that has to be looked into. I thought this is big, really big. And I looked into it. I looked into the fundamentals of the business, looked at the balance sheet, looked at their, you know, what deals they may have on the table, and they speak about a lot of companies that they may have partnerships with. At the end of the day, I came to the conclusion that the balance sheet just did not look great at all. They just did a massive cap raise, and I thought, you know, this is another stock that's huge news. You get a massive boom out of it, and then you hear nothing from it you hear nothing from it ever again, and the company essentially evaporates. That's sort of what I was seeing. But the stock prices boomed, I think about up 150% or so since I actually looked at it. And you know, it's disappointing because, well, it's even gone up even more than that. I was looking at it when it was about 60 million market cap. Now it's 260 million. It's disappointing because, you know, those are huge gains, absolutely huge gains. But then again, these are the sort of companies that you just never know. You just never know, really. They come out with an announcement about some great technology, and it either gains traction or it doesn't. And, you know, I kind of think that we'll expect to see more from Novonix. I wouldn't be surprised if they do land some really big partnerships with some battery manufacturers. If not that, they may be, they're in a prime position for acquisition from any car manufacturer that has been trying to play catch up with Tesla. That is years and years behind on battery tech. You know, someone like, I don't know, GM Motors or Ford or any of those big guys that have billions of dollars in cash sitting around, but they don't have time. You know, time doesn't, the money doesn't buy you more time. It won't necessarily get you up to speed the same. But if they could acquire a company like Novonix and integrate their patented manufacturing techniques in order to make better batteries that could really, you know, level out the competition between them and Tesla, then that would be a game changer. So I think Novonix is really well positioned, but there's a lot of risk in it. You know, there's always new battery technology being developed. Things can change, and things do change constantly in that space. Tesla could come out with something completely revolutionary 6 months from now that makes Novonix battery manufacturing technology obsolete. So that's sort of the risk in a company like this. But I thought I'd mention it, since I mentioned it on the Facebook page. I thought, you know, I want to address how that has panned out since I first mentioned it. So I talked about Kogan and their market, their capital raise, and I think I was going to talk about Adobe. So they're going to be reporting on the US market. So moving across to the US market, they're going to be reporting Thursday after close, which will be Friday morning for people in Australia. And I'm keeping an eye on that stock. It's a stock that has long been a really great stock to to hold at all. And I haven't done a full fundamental technical analysis on the stock, but the way I see it is that Adobe has a very sticky product. Once you get into it, you just grow attached to it. I'm someone who uses Lightroom, Premiere Pro. It's a really good product for what it is, at a reasonable price, and I think that there's probably not going to be too many people that have dropped off their subscriptions to Adobe, but there possibly will be an increase in subscriptions, because I personally think that during this whole time where we've had more time to ourselves to evaluate our careers, our day-to-day life, work-life balance, what we want to, what brings us happiness. I tend to think that there probably has been an increase in people that have had that reflection and have gotten more in touch with their creative side. I think there's a lot of people that are quite creatively adept out there that have gotten really caught up in their day-to-day 9-to-5 work lives, and with the opportunity to work from home, they've potentially wanted to get more into photography, get more into illustration, anything like that, and Adobe is pretty much the go-to. There's others out there, but Adobe is a well known brand for that sort of thing. So I wouldn't be surprised to see a bit of an uptake actually in the subscriptions. And I could be completely wrong, but that's why I'm really interested in watching this stock, how it reports, because I think long-term Adobe is a great stock. I probably wouldn't mind adding it to the portfolio if it was actually just a bit cheaper. I think it's pretty expensive, particularly when we're pretty much at an all-time high, but I think it's a great stock, and that's why you pay a premium for it. So that's pretty much what I wanted to cover tonight, guys. I haven't really been doing many of the live streams lately, but I'll be trying to get more into it over the coming weeks. And I don't want to be the person that sort of asks for the channel support, but I'd say that if you do enjoy the channel, if you do enjoy the live streams, if you go check out the Discord, I put a lot of information in there about stocks that I'm looking at, opinions I have on different things. I'm starting to get more into research articles, and I'll be publishing those. If you do enjoy all of that and you feel like supporting to enable me to do more of that and give more back to you, I do have the Patreon account, and I've got a few different membership levels there, and it all helps. I'm not going to try to sell you on anything. There's different benefits to each tier, but happy for if you want to contribute in any shape or form. It's much appreciated. Each tier gives you different benefits, and the highest tier, there's things like access to the Bags of Opportunity stock list and research. So that will be an ongoing stock list where I just compile my top stocks that I think have the opportunity to make some serious gains, and I'm talking double, triple, quadruple your money over the space of a few years, and other benefits in there. So if you want to check that out, if you're keen on that, that's awesome, but I thought I'd throw it out there as every little bit helps the channel. We've also got the t-shirt, Market Unpacked t-shirt up on the store now. It's going for $15 until Sunday, so if you want to pick that up, go order that, and yeah, it's really appreciated. So guys, thanks for listening tonight. It's awesome to get back into it, talk some stocks. Always enjoy it. So until the next one, catch you later, guys. Bye.